Welcome to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Well, index futures pushed up, making new all-time highs before at the end of the day getting absolutely kabooshed. S&P futures were trading 69.44 before dropping about 20. NASDAQ futures were trading to 26,000, around the 26,230 level, and they dropped about 70 at the end of the day. Nvidia up 6%, trading now 204, up another 3 in the post market. Avago up 10, up 2.79%. Microsoft was trading 553 today. I tried to short about 553.50, and it dropped $7-8 before trading all the way down to 541, and then rallying up to 543, 544, 545 before dropping at the end of the day. Microsoft up 2%. We had Palantir up practically unchanged. Meta was traded up and then got kabooshed. So Meta really not acting right there. The Russell, the IWMs down over the Russell was down more than 0.6%. Gold was down 1.28%, and we had MSTR down over close to 4%, and that's with Bitcoin trading above 116 at one point. We had a monster short in Bitcoin between 115,500 and 116,000. Bitcoin down right now off that top over 3,500 points. All right. Okay. Also, we saw SMCI trade up today. Great patterns on SMCI. HIMS down over 2%. Tesla up about 1.68%. Tesla still very bullish still on the 15 to 30 and the 60-minute time frame. All right. So we saw oil get down 1.84%. Oil absolutely kabooshed. Oil is in a significantly negative trend, and I'm going to start with oil. But again, the patterns today were off the non-confirmations on the shorts on the S&P futures on the 30 and 60-minute time frame. Around 210, we saw a big spike up. Actually, it was a little earlier than that. We saw a big spike up on the indexes right around the 1235, with the fact that President Trump and President Xi of China look like they're going to come to some type of terms on the land and the tariffs and all the nonsense that goes with it. S&P shot up and up to 69.30, dropped down to 69, under 69.17, and then never looked back the rest of the day. All right, so let me go right to it and show you here. Okay, first of all, I want to show you oil. Okay, I want to show you oil. And this is really exactly what you should be looking at for the combination methodology, okay? So when you see the USOs right here, reverse to sell on the algorithm here, MACD negative above the pivot, blue over yellow. You can see the algo reversing to sell. The yellow dots are into the cayenne, and now correlated with the 30 and the 15-minute time frame. What do you look to do? You look to short the first bounce in the 15, then the second bounce on the 5. On this push up here on oil, you can see the high in the USO 71.74 before it got absolutely kabooshed down to 78. So oil dropped roughly about 40 cents on that pattern. That is a monster short pattern. That's why I tell people all the time, you need to look at the underlying ETFs when you're trading the continuous contract, in this case oil, because you would not have seen that pattern on oil, but the USOs really kicked in, especially when that 60-minute reversed the sell, putting it into a negative trend. You short the bounce on the 15 and the 30-minute time frame. I want to show you gold here today. Gold had a nice run up off the lows, but what stopped it? The 30-minute time frames. Here's the bounce on the 15. Here's the bounce on the 30. Now, the positive MACDs are going to give some support here on gold on the 15 and 30-minute time frame. But this is what you got to worry about here. The 60-minute time frame. Look at the yellow dots. They're near the Cayenne. They're not looking like they're going to reverse to buy like over here. Okay? They're not looking like they're going to reverse to buy. I'll show you what I mean here. If I can see a good example. They're not looking like they're going to reverse to buy like here. See that right there? If you look at that's the price within the algorithm. So I think that gold has got a lot of downside coming. Now, again, we'll get into the FOMC tomorrow. We'll get into, the earnings after the close tomorrow. But again, you see this here. This was a beautiful bear flag on the 60-minute, and it just never looked back. Okay, and we got this really great short pattern. So we'll see what happens with the GLDs and gold tomorrow. All right, AMD, really nice short here off the 15s. Again, if you see the 30-minute time frames, the pushing up here, you can see here at 1 o'clock the push up to 63. The MACDs could not confirm on the 30-minute. Had nowhere to go but down. You can see the drop of almost $6. Look at the 15-minute time frame right here, getting overbought here at 12:45. This is the same time. The MACDs cannot confirm on the 15 and 30-minute time frames. What do you say? Let them have them. Okay, beautiful patterns there. Meta today. Okay, Meta, really great shorts after the opening on Meta. When Meta opened today, you can see here, this is the gap up right here above the 758 level. If you look here on Meta, you can see that the MACDs cannot confirm on the 15-minute time frame. What did Meta do? Look at this, 58.40, boom, down $13. And if you look at the 30-minute time frame here on Meta, right here, you can see as well that the MACDs cannot confirm the gap up on the 15 and the 30-minute time frame. If you can master the art of these divergences, you have mastered the art of trading. And this is what I teach during the day. And I will tell you emphatically that this is exactly how we look at divergences on the opening, buys and or short, longs and or shorts. Okay. Now, I'm going to show you this here as well. You can see the 30-minute got overbought into the negative MACDs. So when Meta pushed up to 56, it got absolutely cabooshed here again, down 6. But I'm going to show you this pattern here. Actually, I'm going to do it over here because my screen is blocking. When the algorithm reversed to buy on Meta, right here, with the MACD above the pivot, you went from a sell disconnect to a buy disconnect. The algorithm reversed to buy on Meta on the 15, and it correlated with its 60-minute time frame. But the way this strategy is written is when you have the MACDs above the pivot and the algorithm reverses to buy, in this case, the 15 reversed to buy, you push up, you look for shorts on the overbought condition. You can see the algo is reversing to buy with the negative MACD. You take the short, and then you take the first pullback on the 15. Because why? The 15 reverses to buy. It correlates with the 60, and then you can take the long. So here's the short. Boom. If you sold this here above 53, 54, you cover, and then from 50 under 51, rally 6. So great pattern here. And then at the end of the day, you could have taken some scalp longs here off the 15. Really great patterns there. Also, let's see here. The gold, we had gold short there. Just looking at overall. Coinbase, COIN. Again, great patterns here on Coinbase. The the 30-minute reverses to sell. Look at the MACD negative above the pivot. The 60 reverses to sell right here, right at the end of the day. So we'll be looking for shorts on Coinbase. Now, this is when Coinbase was trading here today at 230 above the 73 level, and you can see the cabooshin. It dropped 18, right? Now this again, okay, if you see this pattern, right, you see this pattern when the 15s were getting overbought into these negative MACDs. This is a real big problem here, right? When you see these negative MACDs, even here on the high at 73, the MACDs couldn't confirm. When the 15 reverses the sell, there's an 85% chance that the highs are in for the day. And then once the 30-minute reverses the sell right here, you can see the 30, if I can click it, the 30 reverses the sell right here at 11:30. So now you see the MACD blue over yellow above the pivot. Look at that, beautiful. The only thing that's missing on that pattern is that the ADX is not rising, okay? The ADX is not rising. So basically, what do you look to do from 11:30 on? You look to take every short on the 5-minute time frame. So from 11:30 on, you can see the shorts here. Beautiful bear flag right here at 11:15. Here's a short 1. Here's another short. Here's another short 2 right here. And then you got another short here at the end of the day. So 3 great shorts. Now this short here actually was after the 60-minute reverse to sell. So now after the 60 reverses to sell and it correlates with the 30 and the 15, what's the strategy? You short the first bounce on the 5-minute. You can see here the push up to above 57, and then it got caboosed more than $2.5. All right, great pattern there. All right, Bitcoin. Now I'm going to show you why I said this was a short up here. If you look at Bitcoin when it was making new highs here, we'll go to Bitcoin. You can see here's the high here on the push up to 116,100. Look at the 60-minute. Here it is. Look at the 60-minute. The 60-minute MACD cannot confirm. So if you draw your horizontal line right here, boom, okay, and that's not really straight. Okay, the MACDs could not confirm. Also, when the algorithm reverses the buy, when the MACDs are above, you take the short, and then look at this complete drop here on Bitcoin, monster short. If you look here, once the 30-minute time frame reversed to sell, right here after the drop, you can see here the algorithm reverses to sell. You go into a sell disconnect with the 30 and the 15. Look at the ADX rising. What do you look to do? You short the first bounce on the 30-minute time frame. Here it is, 115,500. Never look back. So again, when the 15 reversed to sell, okay, there was an 85% chance that the highs were in for the day. When the 30 reverses to sell, there's probably even a higher 97% that the highs are in for the day. But now you have what's called a sell disconnect. The 30 reverses to sell, it correlates with the 15, and you short the first bounce on the 30-minute time frame right here, and then that was a monster short. And then what happens when the 15 reverses to sell at around 3:30? Okay, then what do you look to do? You short the first bounces on the 5-minute. Here's 3:30. That's 3:10. Really, you didn't get any shorts. The ADXs are rising. It just got absolutely caboosed all the way down. So again, Bitcoin, big sell divergence on the 60-minute time frame on the high. You can see here the non-confirmation and a really, really great short there. All right. Okay. When I get back, I will tell you what I expect for tomorrow. So for tomorrow, we have the FOMC at around 2 o'clock. And I think they're going to cut interest rates. The Russell is down $1.77 today. So again, I think the bond market being up to 119 now, rates dropped here. I think this is all priced in already. And there's going to be a catalyst here that's going to make the equity markets go down. Just in the last 3 or 4 days, just looking at the 60-minute time frame on the QQQs, there are 3 gaps just on the hourly chart that are $22 lower, which brings it down to 611. The Qs close at 633. Too rich for me in my blood. Also, tomorrow we have Microsoft, we have Meta, and we have Google after the close tomorrow, along with the FOMC at 2 o'clock. On Thursday, we have Apple, Amazon, also Boeing and Caterpillar tomorrow. And then we have, I think we have Reddit, and we have Roku, I believe, on Thursday. But the big ones really tomorrow are Microsoft, Meta, and Google. And then on Thursday, Apple and Amazon. Okay? So, and then I think NVIDIA's in a few weeks. But again, 5 big names tomorrow. You have Boeing and Caterpillar as well tomorrow. But again, so what I'm looking at here right now is these 60 and 30 minute time frames are starting to roll over here. I am bearish as all hell, okay? And I think this is a really great time, again, to be buying SPXUs and build up a really good position in the SQQQs, because if you look here, just to show you, you can see the 60-minute time frame on the QQQs here. Look at the gap. Look at this gap. Look at this gap here. Look at this gap here. Okay, first of all, here's the first gap right here. Here's the first gap. Here's the second gap. And then here's the third gap. Okay, so with that being said, I said let them have them. Let them have them. I think gold's going down to 35, 38.50, then 36.50, maybe even those 34.50. Then I think you back up the truck. I don't care if it goes to 32.50. And silver, you got to buy it. In my opinion, I'll be backing up the truck if we even get near that 36.50, 38.50 small, 38.60, 36.50 and a half. To buy more. If it goes down, then I think you really take a really big position on the gold and silver. All right, so for tomorrow, if we do gap up, I say let them have them. Market's way overextended here. The pattern on the daily, if I show you here, is a non-confirmation here. If you bring up the Qs here, you can see the daily. You're making new highs here, and the MACDs cannot confirm. Look at the spiders here. Look at this. Look at the spiders. This is parabolic. This is insane. Okay? Look at this pattern. 1 gap, 2 gaps, 3 gaps, and then you got gaps all the way down to 6,000. But if you draw your horizontal line here, the MACDs are not confirming the high on the daily. I say let them have them. I really do. I don't care if they go to 69.80, 7,000. I think this downside outweighs the upside. Nobody's short, and the whole world is long. All right? All right. So when I get back, I will tell you something that I want you to hear. You need to listen to this. So one of my students calls me up and says, hey, Steve, what do you think of the NASDAQ? I said, I think it's overextended. And, basically, we look to be flat at the end of the day. We're not bigger than the market. But the big thing here was the fact that he then tells me I'm short the NASDAQ 1,000 points lower. Okay. I said, that's not trading. That's gambling. He says, yeah, I know, but I thought there was a top. I said, I don't care what your explanation is. That's gambling. 1,000 points lower. Now, 1,000 points in the NASDAQ could be, but that's not the point. Okay. That's not the point. The point is that he did something, broke discipline. He thinks he's bigger than the market, and he got rolled over. Now, he may have a lot of money to stay short, or he may have added. I really don't know. I'm supposed to be talking to him later on tonight. I can't give him any investment advice, but I'm just going to hear him and say, that's not trading. Trading's being able to go for your singles and doubles, to trade, be flat at the end of the day, go enjoy your family, your children, your animals, your pets, whatever, and go enjoy your life and come back another day. But to be short 1,000 points lower on the NASDAQ, well, that's not trading. And then God knows what the amount is. I'll find out if he wants to tell me. But again, I can't give advice. If he says, should I add more? Should I cover? I say I can't give advice. That's something you did, and I'm not registered to do that. So it really breaks my heart. Also, gold. When gold was trading 43.91, every analyst pretty much, from what I saw or read or heard from others, was saying gold's going to 5,000. Gold's down over 400 points since that. So for me, I think the most important thing here is you block out the noise. Yes, gold was probably one of the most overbought conditions probably in the last 10 years. Okay? And gold's down four. The daily's reversed the sell. The weekly's about to get a sell reversal. So that high of 43.91 could be intact for a while, and it could take months before we base, okay, base between whether it's 3,300, 3,600, 3,400, 3,800, whatever. But eventually gold will go back up to the 4,800, maybe even touch 5,000, and that'll be something. Okay, and I think silver will probably trade in the high 50s to low 60s at the same time that gold is pushing up. But gold has a lot of damage now, down over 400 points. I got the sell reversals on the daily, on the gold, and I'll get the sell reversals if gold stays about another 100 points from here, where it is currently. You'll get a big sell reversal on the weekly. That means the daily and the weekly on my indicator 4 will be turned to sell. So with that being said, I just wanted you to hear these stories because they're nightmare stories. And basically, my community of traders all day long sending me, made 800 on 10 accounts, made 500, did this, did that. And it was just so rewarding to see people do so well. And that's all that matters to me. All right. With that being said, thank you for joining me tonight on The Bull, the Bear, and the Ugly. Please hit the subscribe button, leave a comment. Also, if you'd like to join my community of traders from around the world, please go to my website, sktrading.live. It's $4.50 a day. If you take the $99 package, you get the live stream, which is a nanosecond, which is like talking to me now. You get the member Discord, and you get my chart overlay on TradingView. Also, if you'd like to follow me on social media, I'd like for you to follow me. Again, it's official Stephen Kalayjian on X, Instagram, and TikTok. Also, I'll be streaming tonight on 8 o'clock to 10 o'clock on my SK Trading YouTube, which is where the podcast is. Also on my Funded Futures YouTube. So I hope to see you there tonight at 8 o'clock till 10 o'clock. Gold the last couple of nights have been slow, but some great patterns. Also, if you'd like to reach out to me, my cell phone number is 914-500-7484. With that being said, thank you. Have a great night. God bless you, and God bless the United States of America. Good night, everybody.
Thanks for tuning in to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe at sktrading.live. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.